Keeping on the theme of trust, which George so expertly guided us into, one of the three most important letters for any mining companies today, and probably more so, I will say definitely more so into the future, are ESG, environmental, social, and governance. We're now at a point where in 2018, for the first time ever in Canada, assets under management, 50%, more than 50% of assets under management in Canada had to pass through some sort of responsibility filter. So there's an absolutely crucial issue, and we've assembled a great panel of experts here to help guide companies through what are going to be the key issues to manage ESG and make sure that your company isn't dragging behind, but is actually grabbing the bull by the horns. So to introduce the panel and to guide this conversation, honored to introduce Trish Saywell. Trish has been one of the top mining reporters for over the last 10 years with the Northern Miner. She recently took the role as acting editor-in-chief and has done a fantastic job also spearheading our TNM Leaders video segment, which if anyone hasn't seen here, I encourage you to go to our website and check that out. That's where we're interviewing top CEOs in the industry. And yeah, that's enough for me. I'll pass it over to Trish.
Hi, everyone. Well, it's a great panel to follow on George's excellent presentation earlier, all about trust. Environmental, social, and governance, or ESG criteria, are a set of standards for a company's operations that socially conscious investors use to screen potential investments. Environmental criteria obviously consider how a company performs as a steward of nature. Social criteria examine how a company manages relationships with the communities in which they operate, their suppliers and employees, and governance deals with a company's leadership, executive pay, audits, internal controls, and shareholder rights. It's a complex field that is evolving rapidly, and in the mining industry, we see reminders of its importance every single day, from repeated tailings dam disasters in Brazil, to anti-mining processes in countries like Ecuador, to recent blockades at Newmont Gold Corp's Peñasquito mine in Mexico, for example, or MMG's Las Bambas copper mine in Peru. Luckily, we have a very experienced panel of experts here today who can weigh in on some of these issues and what more can and should be done to get ESG right. On my immediate left is Kulvir Singh Gill. He is the Associate Director of the Development Partner Institute, where his focus is on innovation, technology, and sustainability. To his left is Claudia Mueller. She is the Associate Director of Global Mining Management at the Schulich School of Business. Next to Claudia is Sam Pazuki. He is the Vice President of Investor Relations at OceanaGold. Miranda Werstiuk is Vice President of Corporate Advisory Services at the Optimize Group, a project engineering firm, and prior to that spent 25 years in the investment banking community. And finally, Raziel Zisman is the co-founder and partner of Whittle Consulting, where he leads the Sustainable Governance Initiative. He's also Executive Chairman of Alicanto Mining, a private project generating company. So welcome, everybody. Sam, let's start with you, since you're on the front lines at OceanaGold with mines in the US, the Philippines, and New Zealand. When we talked about this earlier, you said that ESG is really starting to take hold among certain groups of investors, particularly in Europe and the UK, which seem to be ahead of us. And they all have, all of the funds have in-house ESG experts that are looking at all their investments, or they hire independent third-party audits to look at them. Can you talk a little bit how it's changed since you started OceanaGold?
Sure. Thanks so much, Trish. It's great to be here at this forum. It seems like a very good event. And yeah, I mean, ESG is definitely very topical. We've heard quite a bit on ESG this year in particular. It seems to be a bit of a buzzword. But it's been around for a while now. I mean, but we have seen sort of a paradigm shift in ESG investing over the last 2 or 3 years, particularly in the last couple of years. And based on our estimates or our figures, there's about $25 trillion of investments under management globally, with investors who consider themselves to be socially responsible investors, SRI. But I mean, ESG has been around for a number of years now. It really took off in 2000 with the development of the Global Reporting Initiative framework, which a lot of companies, including ourselves, use for sustainability reporting. And then it really took off in 2006 when the UN Principles for Responsible Investing was put together and started getting support from investors. I think right now there's about 1,500 investors who are signed up to the UN PRI. And then in the last few years, especially with obviously with a lot of social media, a lot of emphasis globally on climate change, the focus from the UN on making changes to how corporations and countries are adapting and changing sort of their landscape with respect to climate change and greenhouse gas emissions, investors, or the underlying investors, are now pressuring funds to at least put that as another criteria before they make investment decisions. So a few years ago, we looked at it more as a risk management tool. We have a number of global investors, a lot of the large investors, particularly out of London, and we consider London to be the epicenter for ESG. We see a lot of those investors adding ESG to their criteria. So from our perspective, we were looking at that as a risk management tool to make sure that the good work that we were doing on the ground was being translated to what investors were looking to see in terms of responsible investments. We've become more mature. Unfortunately, the industry hasn't become more mature in terms of ESG and reporting and disclosure practices. But we are certainly looking at it as an opportunity because of how much money now has gone into ESG investments. So sovereign wealth groups, such as Norway's Sovereign Wealth Fund, making statements that they don't want to invest in companies that are not responsible. They even said that they won't invest in oil and gas. You know, that's a paradigm shift in how investors are thinking and where they want to deploy their funds. More recently, I met with one of the largest pension funds in Canada. I won't say who, but they basically had a team there, including the responsible investment manager, and they made a statement that they can see in the next little while. They didn't really provide a time frame. They can see themselves investing in companies that have a certain score with the MSCI ESG performance rankings, and that if gold companies, for example, or mining companies were below that threshold, they would not invest in them. And because investors still need to deploy money in, say, gold companies, that money will flow into companies that meet their threshold requirements. And based on what they described, the threshold was going to be set fairly high in terms of the MSCI ESG rankings. So, I mean, that is a paradigm shift. I mean, the companies do need to respond. They need to realize that this change is happening and it's not going away. Mm-hmm. Based on our perspective, we certainly believe that this is only going to get bigger.
Right. Okay, thanks, Sam. Kulvir, when we talked about ESG recently, you expressed a fair bit of skepticism, and you pointed to the tailings dam disaster in Brazil, Vale's iron ore mine, and which killed 251 people. And you said, you know, initially the share price went down, sure, and you were right. I checked the numbers. The day before the breach, Vale was trading at $14.86. At the end of the day of the breach, it went down to $13.66, and by Monday, it was down again to $11.20. But by mid-March, so basically a month and a half later, it was back up to $13.70 a share, and by mid-July, back up to $14. Where's the disconnect?
Thanks, Trish. I think you caught me on a day I was quite pessimistic about things, and saying at the end of the day we're putting all this effort into it, but geez, Vale's share price, which we're still using as the biggest indicator of their future success, is right back basically where they started before this whole thing. And so I'm still a believer, and I'll talk about that, but I'm getting a little bit more skeptical. So I've been looking deep about where we can find ways to strengthen my belief and maybe belief of the industry. By my very nature, the work we do with the Development Partner Institute, we're really focused on moving the mandate of the industry from an extraction focus to a development focus. That mining will only succeed if we deliver on the expectation of all of our different stakeholders. And unfortunately, the expectations of our stakeholders continue to increase. So despite all the great improvements being made by the industry to keep up with regulations, but keep ahead of regulations, that the gap continues to grow, and that's where the social license issues come up. So I believe it from the work I do around the world. I also believe from the capital markets perspective, there's tons of research that confirms that companies that score higher on ESG have better long-term success. ROE, return on invested capital, even market performance over the long term, they tend to do better. And I'm also a believer that it's still the right thing to do. in terms of taking responsibility for our actions and doing what matters. But I am getting skeptical. You mentioned Vale, that they went down 25% and they're right back up where we started. I'm also seeing that I think our industry and investors I think they're getting good at punishing the worst, but I'm really having a hard time seeing the carrot and the stick being applied between the mediocre and the great performers. So as long as I'm not the least worst mining company, I'm okay. And now we have the whole plethora of standards coming through. And that's creating a whole cottage industry. And the standards are great because they create a minimum floor for performance. But we all know, anyone who's worked in a large corporation or interacted with it, how much of a check-the-box exercise it really is. We need to call bullshit on some of these things. Yes, there's a lot of companies that do it and really do it. But for a lot of downstream suppliers who are asking upstream, what's happening here, fill out this form, and as long as you don't check anything on the right side, I'm happy. And yes, there's third-party audit coming in there, but the costs of all of this are becoming apparent. But are we doing this because we need to be compliant with the letter of the law? Or are we really starting to believe in the spirit of the law and the principles behind what we're doing? And we're also starting to see that there's this alphabet soup of standards, and people are starting to cherry pick. You ask, well, we're applying these standards that seem to be not as rigorous as the ones over here. And in all of that, we're still waiting for we're at peak standards. We're still waiting for the shakeout and the great reconciliation happening about the different standards. But right now, the costs of applying the standards and building a standards regime is becoming apparent. But the benefits of being awesome at it versus just being good enough at it are still wait to be seen. The other thing is, at the end of the day, there's this still split we see between, and we say ESG, but from what I see, there's still two big camps. There's the climate change camp, and there's the social and community side camp. And those two are related, but they're not completely related. There's a Council of National Chiefs in Calgary that are meeting in a few weeks, and it's over 100 First Nations chiefs that are pro-development. That's kind of the awkward truth that doesn't come out in our national conversations and our national elections. How do we reconcile the two things between that? And so I think there's a lot of things there that I think we need to kind of reconcile, and it's not black or white, but I am still very firm believer, and I think these things are going to come together, and a few different things. That one is, we know the Business Roundtable came out a couple months ago now, and said corporations don't just exist to increase shareholder value like they have been for the last few centuries. They exist to, when they're at their best, all stakeholders matter, including employees, suppliers, communities, as indeed stakeholders. Now, that's a huge shift at the top, and we need to see that trickle down, but directionally, that's monumental to kind of, you think of how we build our capitalist society. But the bigger issue is that we have every one of our mining companies has floors dedicated to measuring our financial performance. And there's GAAP, and there's whole entire industries built on accounting principles. But around principles around ESG, we're still looking at what the standards are and how do we report on it, and how can people evaluate that. And I was really pleased to see the work being done around the Embankment Project for Inclusive Capitalism. That was EY with 30 other businesses, and it was one of the major efforts to start to put measures around innovation, society, environment, governance, so that we have almost a gap for these kind of areas. So I'm pleased about that. And I also think pressure is going to come from different places. I think standards do matter, and I like multi-stakeholder standards like IRMA emerging, that it isn't just top-down, they've been built from the bottom up. I also see responsible sourcing. We have a whole initiative at DPI in which we're talking to the folks like BMW and Tiffany's and Microsoft, and the pressure they can put upstream, not just on fabricators, but all the way up to the mine. And lastly, something that hasn't happened too much in mining yet, but I think is on the horizon, and this is employee activism. We talk about investor activism, but employee activism is happening. You saw this with Wayfair, the furniture company that went on strike because their furniture was being sent to detention centers on the Mexican border. McKinsey had a huge uproar, and they pulled all their contracts with ICE. And we're seeing Google. Those are just three examples that are happening there. What happens when we have a whole generation of millennials, purpose-led millennials, running mining companies and demanding the mining companies do better, not just because of external stakeholders, but because of internal alignment or lack of alignment with their values. So I see a lot of optimism on the front there, but right now when I'm looking at just pure investor sentiment and where the numbers shake out on the markets, it's not there yet.
Okay, thanks. Miranda, you recently joined the Optimize Group, but before that you were an investment banker for 25 years at IBK Capital. I'm interested in your thoughts. You've said before that the large companies, just because they're large and have a big budget, it doesn't mean that they get ESG right. And I was wondering if you could elaborate on that.
Right. So this morning has been quite interesting, especially George's conversation and presentation about building trust. And I worked for 25 years for a private investment bank, raising capital for the early stage juniors. So what I like to call the scrappy fundraising to fund exploration to build the next level of companies, right? So we've been talking about ESG for mid-tiers and majors, but really my work has centered on these early stage companies, and it really doesn't take a lot. I was talking to George. And when we talk, Trish, about building trust and building relationships for an early stage company. And we worked years ago, probably a decade ago, with a company in Colombia who before they even set foot on the property, before they even did any drilling, they spent time with all the local communities. They sat down, they said, these are the 3 communities that are going to be impacted within a 20, 30 kilometer radius of the work we're going to be doing. They did a census, they did a health survey, they looked at education, they looked at community, what were the drivers of the community, they looked at cultural systems, they looked at belief systems. Then they went back and they put together this sort of baseline of activity. And from there, they built their project. So taking time, and it didn't take very long, 6 to 8 months, before they ran out of the gate to start exploration, to bring in teams of people. They spent time with every single member of those communities and the community leaders, the mayors, all the actors for each and every one of those communities. So when we went down for a site visit a year into the work with the company, we sat at a lunch with 40 people who were absolutely thrilled with the work that this company had done. And it didn't cost a lot of money. It was just careful thought to take a look at what the whole system looked like, what were the pieces of the puzzle they needed to fit together in order to be able to make this project work. And yes, it's never a linear straight line. I mean, we all know that from exploration to development to production is chaotic. But the company started production this May, right? So with a target guidance of 40,000 ounces of gold per year. And they made it work. And they were a tiny junior. I mean, at one point they had $150,000 left in the bank, but they made it work. And they built those relationships and they built trust out of the gate, right? So having those fundamental systems in place from the get-go, 100% contributed to their success, 100%.
Yeah. Okay, Raziel, now you've mentioned in the past that a lot of these mining companies have to go to places where there's no infrastructure, or virtually no infrastructure, and that you've suggested that one way of getting around that in improving ESG is by doing partnerships with other companies in other industries like construction or agribusiness or telecoms. And that might help improve ESG. Do you want to talk a little bit more about that?
Yes, good morning. Great to be here. It's a great forum. Mining is, there are many types of mining companies. The ones that Miranda, very tiny companies, very limited budgets, and you have the Vales and the Barricks of the world. So you're comparing a back-of-the-woods small Cessna copycat with Boeing. But we face tremendous challenges. Number one, everybody loves to hate mining. So that's something that we need to advance as a matter of course. Secondly, to the point, when in large-scale mining in particular, when you develop a large mine, you go to a remote area and you develop a Sudbury, and 100 years later you have a whole economy built around it, mining companies need to try to capture some of that value. If we turn it upside down, the percentage of mining that mining represents in Mexico is 3 to 4% of GDP in Mexico. Mexico is a large mining jurisdiction. So if you were to look at a region and do mining as an incidental, looking at using Kulvir's 100-year vision, and you walk it back to today, what could you do as a business to capture value going forward? And the G part in ESG, I mean, governments also need to participate. the way I put it when I talk to CEOs is you will go to a country, you say I want to develop this area, the government will tap you in the shoulder and say thank you very much, go ahead and build the roads, build the schools, build the hospitals, and we'll come and tax you. And you're on your own, and everybody sort of points the arrows at yourselves. Maybe there's a way for us as an industry to come in and sit down with this large vision. And companies like Ivanhoe, which have terrific deposits in South Africa and in the Congo and the DRC, they can look at that long-term vision and try to communicate. The other thing that the other challenge that we face in our industry, if you're a single mine company, your mining will be gone in 15, 20 years. I mean, what impact can you have? What ESG can you do in that sense? If you develop a whole district, it's a different perspective. If you have a long-running mine, technology is going to change. You're going to be mining with a horse buggy when the electric car comes in, literally. And there are technologies that are revolutionizing the industry. What does all that mean to us is we need to participate in fora like this and discuss it openly. I don't know how many members of government are here. Can you raise your hands? Regulators? My point. Yeah. How many people from the Ministry of the Environment, from communities? We need to talk, all those people have to be brought into the picture together. And I don't like the term CSR. CSR is a way of sprinkling solutions, something sort of ant-repellent, right? You don't want problems, that's why you do the CSR. That is the wrong way of looking at things. But to bring people in and to solve the issue that everybody hates mining, we need to educate everybody. People have to come in and understand. And we are really in fairly primitive times. The other thing that I hear quite often now, companies will say, you know what, between open pit and underground, we're going to forgo the open pit, we're going to go straight to underground. Because we don't want to bury the problems, but we don't want our problems to be shown up. That may not be the right approach. The other example, and with that I'll sort of wrap up what I'm saying, drones in our industry are being used, but drones are being used very intensely in agriculture now. Lots of, in terms of hectares around the world. How much of that data being gathered by drones can be applied to the mining sector in terms of using hyperspectral sensors as all those drones fly all over the place to feed that to our industry? If we go back 20 years and come back to today, how primitive are we in terms of the things that we'll be doing as a matter of course 20 years from now? And with that, I want to give you back the microphone.
Last but not least, Claudia, you come from the academic side of things at Schulich. What are some of the discussions that are going on at Schulich about ESG, and can you give us some examples of the research you're doing?
Sure. So thanks, first of all, for the invitation. Great to be here. So I wanted to start off by, sharing a little bit of an insight into what we see with our students. So being, at the forefront of working with future leaders in the industry. And then I wanted to finish by giving some recommendations on hopefully things that could, from a board perspective, help us address some of the concerns that we've heard, in particular from Kulvir. So just to start things off, I think, right now or until now, we've seen ESG topics maybe not quite as the wave that George referred to earlier on, but more as a slow rising of the sea levels. What we will be seeing, though, is a tsunami. And just to give you a couple of examples. We've only been around for 8 years, a program, so we're babies on the academic front. But what we've seen over those 8 years is a tremendous increase in the questions that we get from our students around ESG, the interest, the importance that they're placing on ESG, and the questions around shareholder value versus stakeholder value and inclusion of all stakeholders in business in general, in particular in mining. Now, if we look at some research, generational research, what we've seen in the past is that generations like millennials that have focused a lot on innovation and generating ideas are typically followed by generations that do. So now imagine all the great ideas and all the things that we're hearing about and the change they've already brought us, and imagine now things actually get done. That's going to bring a big change. That will be the tsunami, and the tsunami will be people change, not technological change. So that just as an introduction to, we do need to be ready. And I think based on our research and our conversations, there's a number of things that we can already do, especially on a board level, to really get our organizations, our mining industry ready to really, serve that wave, that tsunami wave that we're expecting. So the first one that I wanted to share is getting involved. So if you're a board member, get involved. Get involved in strategy discussions. What we're currently seeing is, and I do have some numbers here, only about 20% of boards are actually actively involved in shaping strategy. Now, take 20%, and now how much of that time is actually spent on discussing ESG as something that is important to our strategy. So that doesn't leave us with a lot of wiggle room, with a lot of discussion of ESG as something that is integrated. We've heard a lot about E, S, and G being separate, but that's also separate from strategy. So using an integrated approach is something that will really change mindsets there, and that has to be demanded and brought forward by board members. In our program with our students, what we do is we have our own framework. We call it this GMM strategy framework, and it really is focused on teaching these future leaders to think about sustainability as success of a company that is really dependent on making choices that create and distribute wealth to all stakeholders, and looking at it as an integrated opportunity. So what can we particularly do on that front? We've heard a lot from board members in the past. They don't actually get a chance to contribute to agendas when it comes to board agendas, right? So we join a board, you are the new one on the board, and it's, well, we've done this a couple of times before. This is how we've always done it: first point, second point, third point. But at the end of the day, unless we demand and make time for these conversations around ESG, that won't change and won't bring us any forward to that. My second point is really get out there. We've already heard about site visits. We've heard about getting engaged from a leadership and management perspective, but that lives at the top. And at the end of the day, boards are often seen as the connection to shareholders. So then if we are getting those pressures, and we're expecting even more pressures around ESG to come forward from our shareholder base, then as board members, we need to be out there, leave the boardroom, spend more time outside of the boardroom. We are seeing an increasing trend in that across industries. About 48% nowadays are spent outside of the boardroom for board members. But for us in mining, what that really means is site visits. And who do we talk to when we go to site? We talk to operational people, we talk to our technical people. We don't go and spend time talking to other stakeholders, employees who are more and more active, communities who are more and more active, potentially suppliers. We do see that a lot in other industries like manufacturing or retailing. And actually one notable example of doing something like that is having an advisory board, which Rio Tinto recently restructured and really started that, giving that more importance. So that is one way of really engaging with other stakeholders. And the last point that I wanted to make is also leading by values. So again, leadership starts up the top, and it's about trust building. We've heard a lot about that today. But at the end of the day, if the board doesn't emphasize that, then we're losing that opportunity to build trust with stakeholders, but also with our shareholders. We are seeing a trend in the board representing broader stakeholders. You've referred to the Business Council already. In Canada, the official line is that you're responsible for the best interest of the organization, and that is being interpreted in a broader sense, representing employees and a broader set of stakeholders. So that means that we are accountable, and we need to hold ourselves accountable. That includes disclosing information that is valuable to our stakeholders. One example that I want to share here, we hold a annual case competition at the university that is focused on mining and sustainability, and we typically include a lot of shareholders and a lot of investors and mining companies as judges for our students to present to. And one year, something that really burned itself into my memory is we had this young student show up, a female student about my height. I'm really short when I'm standing. And she had printed out all of the information that you could find on the website of our case company that year, which was actually known to be a mining company that had excellent disclosure for shareholders and stakeholders. And the pile was, higher than she herself in height. It was incredible. And she said, "Well, I've read all of this, and I have no idea what this company is doing on ESG." So if that is the disclosure that we're currently providing, even if we're known as a company that is providing excellent disclosure, then we're losing the future generation that is looking for that information, and they will become at one point the sources of our financing. So we do need to address that.
Okay. Thanks, Claudia. Before I turn it over to questions from the audience, we have about 10 minutes left. I was wondering if any of you would like to pick up on themes that have been discussed so far? Just free for all.
Just one quick addition. I talk about education, and to Claudia's point, I have a daughter who's in first-year engineering, and she has grown up in a house with me always working in mining. And as she has, so fingers crossed she'll be a mining engineer. But as she has gone through high school, each and every step of the way, she would sit me down and ask me very pointed, direct questions about, what are you doing? What is this mining? What are you doing to the planet? What do you talk to people? Do you talk to communities? So all for a now 17-year-old who is entering a different phase of her life, to talk about accountability, because she and they're the next generation. They're the ones going to be developing these projects. They're the ones who are going to be financing these projects. And I had to take a step back and sit down and actually walk her through it, that we weren't destroying the planet, because as George, the vision we get is that we are not good citizens of the earth, where mining is a great business, and we need to just continue to build a really good business. So she has educated me over the last several years as she has moved on.
Raziel, you were going to say something?
Thank you, Miranda. I want to make a point. My background is a securities lawyer. I've done a lot of work in the US and here. And it always fascinated me. We worked very hard as lawyers preparing prospectuses that only the accountants and the lawyers read. And the whole idea of disclosure is to educate the public so they make informed decisions. Your point brought it brilliantly to mind. Trust. The public at large doesn't trust us to deliver information. They just don't. So it doesn't matter how much information we put out or put in, or projects we generate, or standards we create, and acronym after acronym, they just don't believe us. So we need to break that. And keep it simple is a very important thing, and values is everything. I mean, it's Kurifani, it talks about you have to talk it, walk it, do it, and continue doing it. And it is, and unfortunately, we live in a world where you are, without mentioning companies, there's a company that is suffering now because there's a local corrupt government. I went through all that stuff in Colombia. I'm going through it now as well. But if the government is corrupt, there's not much you can do. Small-scale miners, unfortunately, they use very primitive, there's technology in a dishwasher is more modern than the technology small artisanal miners use. Why? But they use mercury because they need to earn a living. But those usages, they all taint us. On the other scale, Boeing makes aircraft. They're the best company in the world. Look what happened with the latest, the 737 MAXi. How could they? They never expected, they never dreamt that all those planes would be grounded. Who knows until when? And now they have the other issue they had with the route, the wing route. So the point being, how do we get to earn trust? So when people look at a mining company, they feel comfortable in the same way they feel comfortable with an Apple computer, for example, that Apple is Apple.
So if I could jump in. There's a saying, if I have to tell you I'm a gentleman, I'm probably not a gentleman, right? If I have to keep telling you what a great guy I am, there's some issues there. And if my girlfriend is thinking about a long-term relationship with me, and she goes and hangs out with all of my friends, she says, "Hey, what do you think of that Kulvir guy?" And they're all like, "He's okay. Can't get," those can be some signals. So what happens when we go out there? We have great disclosure. We have great ads, campaigns. Everybody's got a great corporate video. Where are our friends? Right? Where are the companies? Where are the stakeholders standing up and saying, this mine is doing the right thing, we support it? And of course, we can find individuals, we can find one-off, but they're one-offs. So we as an industry, when we kind of bang the table, and mining executives love banging the table, we're just not telling our story properly. Let's throw more money at an ad campaign. Been in many countries where that's the CEO conversation goes on. We're losing the PR war. Well, because you're the one giving the messaging. So the question then comes is, why aren't our friends speaking up? And if our closest friends, the folks that are supposed to be getting all the benefits of mining, are not willing to stand up for us, then the question is, are we really delivering on the benefits to them? So the question of trust is, trust, you don't buy trust, you earn trust. And I have little kids. The best thing I say, the best way to make a friend is be a friend. You do something for somebody else, of course, they're going to stick up for you. You have to extend it. So there's a much more kind of existential question here is, why are we always alone in these situations? You know, something happens to the Apples of the world, you mentioned them, there's a whole cavalcade of supporters, there's a whole ecosystem around them. Yet for us, we're kind of seen at the front line of this, having to fight these battles by ourselves.
Sam, did you want to say something?
Yeah, so, is this on?
Yeah.
Okay. So I agree with what you said, basically what everyone's been saying here, and I think you said a key point here, Claudia, in terms of disclosure practices. You know, mining companies, you know, there are some very good ones who have good disclosure practices, but even some of the best ones, even despite those disclosure practices, don't have the friends that you've mentioned as well too. I think the industry hasn't banded together. It's just been a bunch of individual companies who do good things. Not everybody, but I'd say a lot of the companies in our industry do good things. You know, they take communities out of poverty, they build the infrastructure, they make those sorts of investments, they've got very strong social license, they've got very good relationships with communities, their stakeholders, with government, with their shareholders, but they're doing it sort of isolated from everybody else. You know, they're not banding together as an industry, you know, a group of companies, all like-minded, discussing the issues, you know, the real critical issues. Not just the ones that are important to individual companies, but really the critical issues for the industry. Because mining does a lot, right? It's not the sexiest industry out there. You know, you've mentioned Apple and Google. You know, a lot of people here probably have iPhones or Samsungs, and people love being on their smartphones, but they don't actually know where that smartphone came from. They don't know that a lot of the minerals were in the ground that mining companies have dug up, hopefully in a responsible way, to come up with the products that we use today. So I think there's definitely a miseducation out there. And part of that, and we are losing the PR battle, and we have been for a number of years. But part of it, and I hate saying this, but part of it has to do with fake news as well too. I mean, there are a lot of groups out there, a lot of groups that a lot of people invest in terms of NGOs, put money in, donations in, and they have their own sort of agendas. They've got agendas that are not friendly to mining, and they have no accountability like corporations do, accountable to their shareholders and other stakeholders. And so when you don't have accountability, you basically put out there misinformation. And again, we as an industry haven't done a good job to sort of counteract that misinformation and really put out the good stuff that we are doing, recognizing that the industry does have challenges, but that's the opportunity for us as an industry to improve on.
Did you want?
Yeah, I just wanted to add a couple of words on, again, going back to values and accountability. I think, you know, if you look at any mining company website, and I don't mean this in a bad way, but you look at their statements around vision, mission, and values, and they're all pretty much the same. So, you know, these statements don't really give you an idea of what that company is all about, and what is valued in that company. And that makes it really hard to communicate what we're doing because we present ourselves as being all the same. And then to just extrapolate that even more, when you then dig deeper, and you know, I'm putting my consultant hat on for a moment, but often you see these values being determined by other consultants. So they're not being lived. Values don't exist in isolation for an organization. They are personal. So unless we make them personal and find a way to not only hold leadership accountable to those values and the decisions they make based on those values, and do the same for boards, they don't mean anything. And then, students go out there and they assess these statements, and we ask them, what do you think about the strategy and the values of this organization? Are they aligned? They go out there and say, I don't know. I don't have enough information. And yes, maybe they are in some cases, but why did they do X and why do they not care about this, right? So they see all of these contradicting pieces of information that are not giving them any access point into understanding what the industry is all about.
We're also, if I just might add to that, but we're also bombarded with social media, right? I mean, there's so much, again, information, misinformation out there. One thing that we talk about internally is that you had just mentioned, why do they do X but not Y? We have to do an assessment of who our stakeholders are. And it's not just shareholders, right? It's government, it's communities, it's a number of different stakeholders. And then we go through a materiality assessment to see what is important to those stakeholders, and including employees as well too. And based on what we come up with, that's what we sort of align our ESG programs and policies towards. It's what our stakeholders want, not just because somebody says it's a good idea that we should report to the CDP, right? Because that may not be important to our stakeholders. It might be important to their stakeholders, but not ours. So you have to do the work. You can't just greenwash. You can't just say, I've got a sustainability report and tick off a box. You'd really have to go through that exercise. And it does require board, management, and employees from the organization to be engaged and not just do it for the sake of doing it, but do it because it's the right thing to do and really embrace it as an organization.
We're almost out of time, but one question, if anyone has a question to ask. Otherwise, we'll break for lunch. Oh, yeah, please.
Hi, I'm just curious as to what you guys think of the role that educational institutions and educators have with respect to ESG education with both, I guess, technical personnel that work in the mining industry as well as, future investors. I mean, how early does this start and what responsibility does each educational institution have? Thank you.
So I have two daughters. One is in first year, one's in grade 8. And at the core, the whole discussion around earth sciences and mining started through what they got through Mining Matters, those kits in 3 grade levels through the Ontario school system, right? And baby steps, right? But it was enough, and it's all obviously educator dependent, and how the basic information in those kits is put forth to each class. But at home, and they have both been, my husband's an engineer, and I've been working in mining for 25 years. So the support and education at home about the industry, right, and that it is a really good place, and asking them to think about what goes into the phone, right? Like my older daughter had to do a project where they deconstructed a cell phone and what goes in, and where does that come from, and what does that look like, right? And now as she's moving into university. There are, the engineering courses are how do we build a bright student that understands all these different pieces in the world, right? So she comes to me regularly with questions, right? About, like I said, about the industry, about learning more, about, what if I get involved with Engineers Without Borders? How does that look? Can I work with a mining company? So through educational institutions, yes, and they were good at starting the process, but a lot of it came from home, right, and guidance from home, right.
Actually, I think we have time for one more question. Go ahead.
I think Claudia had
sorry, Claudia.
Just a quick note on that. So I think it is so important that educational institutions look at how they can contribute to the mining industry and how we can really emphasize that we need the future generation to be more involved. It really, you asked about how early does it start. I mean, it can't start early enough. And I think what we're seeing right now is that early in schools, unfortunately, often the perception that students are left with is that very negative perception about mining. It depends a little bit on your teacher, but I get invited to speak at elementary schools and middle schools to students about mining, and then I have conversations with the teachers that invite me, and I say, here's what I'm going to talk about, and they say, oh, no, that's too positive. Can you just talk about all the negative stuff? So why are you inviting me? I mean, obviously I work in mining. Obviously I'm biased. I am obviously pro-mining, but let's do it right, and that's what I want to talk about. So it doesn't have to be only positive, but let's give a balanced picture. And that's exactly what I think educational institutions from early on up until late should be doing, including things like ESG and non-technical skill sets, which we are seeing a little bit of a trend in that in mining schools right now, which is a really good thing to see.
Okay, one last question.
I actually have two questions,
Okay.
one on behalf of my friend there. So my first question is, so what is the extent of ESG? Does it just, go to, does it end at social license to operate, or is it the responsibility of companies to solve the world's problems, especially, say, take a mining company that's operating in a developing world with an extremely corrupt government and nothing's happening and there's a resource cost. Well, is it the role of the mining company to fix that problem, or does it just end with, we get the license to operate from the community and that's it? So that's my first question. And my second question, I don't know if, I hope I phrase it correctly, but speaking of ESG in the context of mining, I mean, what do you tell people in the communities when you're going to be digging up a huge hole in the ground, moving tons and tons of dirt to get a gram of ton, like grade, 1 gram a ton. I mean, that's high grade. Usually it's less than that, 0.17 gram per ton. So you're moving a ton of earth to get 0.7 grams of ore. I mean, having ESG in the mining industry, is that an oxymoron? Like, what are we doing here? Thank you.
You tell them the truth.
Also, the use of gold. Sorry, I'll just add. Like, do we really need gold companies? I mean, the uses of gold is marginal in electronics, like 34% or something, and it's replaceable. They can improve and use other minerals like base metals or whatever, and it's usually for investment and negative beta investment. That's what gold is used for, right? In sovereign reserves. So, I mean, base metals, maybe we need them to have a civilized life, but gold, I mean, what do we tell our people when you're a gold company and you're going out there talking about ESG, what am I going to be saying?
Okay. Who wants to take a stab at that one?
It's easy. We're not going to solve the world's problems, number one. I'm an old duck. I mean, I got degrees in economics, environmental studies, and law. As an anecdote, when I went back to my environmental studies faculty, and when I pulled out my mining company card, they almost lynched me. I mean, the looks of hate I got were very. And I did my master's thesis in the Amazon basin in Peru. The prejudice is astonishing. So let's go back to your point. As a rule of thumb, tell the truth. Be frank, be blunt. Gold, convince a billion plus Indian people and a billion plus Chinese people that gold is worthless. The Wall Street Journal called gold a pet rock about 3 years ago. I don't think that's correct. Your point is very valid. Why dig such low grades? But if you can do it, if you tell people in a remote area, we're going to give you employment, and we're going to transform your area. Another paradoxical example is Resolute in Mali. Automated mine from the beginning. Does the government object? No, because nobody got unemployed. People got employed because the mine was modern from the past. Do you want to fly in wooden aircraft, or do you want to fly in the best aircraft possible? So all these are big questions, but the rule of thumb, same with kids, same with everybody else, tell the truth. Be frank. And if they have a point that is valid, address it seriously with respect. So I grew up in Peru. Remote areas of Peru are being transformed. And the kids of those people that in the periphery or who actually work in the mine, Antamina is an example. Those kids, and I tell this in my project in Colombia, the kids that are the children that I visited, that we give them laptops for the local school, 30 years from now, they can be my bosses. And I have no, if merit comes upon from that, let them be. And the whole world depends on the new minds, bright minds taking control. And those kids are going to be looking after you when you're in a nursing home. So treat them with respect, because they can step on the oxygen tube if they don't like you. So it is, again, the rule is very simple. Be frank, tell the truth. If you don't know the answer, don't BS. Research the answer and give them information. And listen to them. And my point being, you don't go just to dig the stuff and dig a big hole. Ouro Preto in Brazil, there's a beautiful development around the old pit. It's a lake, and there's buildings with luxury apartments all around. This can it won't happen in Peru at 4,500 meters.
What about the resource curse? I mean, it doesn't. I think you're. I don't know if it's it's rather an exception than the rule that when a mining company moves into a community, that the community will prosper. It's usually the opposite. There's research.
That's false. That's completely false.
Yeah. So I can maybe take this and kind of wrap up from the. At the end of the day, and this is saying the obvious. Mining is a finite activity. We're depleting the ore body. At the end of the day, the ore body is gone, and many of the mines are only there for a short period of time. And during that period of time, are we there? We have to put in, we're still a commercial enterprise, but we have to put in enough infrastructure that we can get our product out. But we should also have an eye on how do we develop that infrastructure so that when we're gone, that infrastructure can be shared, or that becomes the basis for what comes next. And I think that's the real opportunity, and that's the real promise. That's how we bring a new generation of young people into mining. We say mining is actually, as I explained to my kids, mining provides the Lego blocks of society. We physically cannot have the post-carbon world we're looking for, modern civilization we're working for, if we don't produce products of mining. To do that, mining is finite, but how can we make the impact of mining sustainable? And how does mining become a catalyst when done right? And there's lots of qualifications of what right looks like. When mining is done right, it leads to that shared value, leads to a flourishing ecosystem, and leads to competitive communities, countries, and companies. Now, the how is where we all argue, but that's the aspiration. And that's the aspiration a new generation of people should be coming into the industry, is that mining matters. Come into the industry and help us figure out a way of making this happen, because the world needs mining, but mining has to change, hence the opportunity.
One very short point. One phrase I use is the following. Mining converts natural capital into human capital. Your legacy in that region is a generation of kids that have high school or university, and they can do whatever they want. They can open a global company. And that's, anything can happen after that. That's our legacy.
Okay, that's wonderful. Thanks so much for joining us. Thanks to the panel.